For TraderInsight.com, I'm Adrian Manns, and it's time for your daily dose of the doctor. Well, yesterday I had a phone call from one of my boot camp guys who wanted to know how I could stand the pain of being patient when stocks were taking off all around me and just running, and how do you keep yourself from just pulling the trigger and trying to jump into every single run that's in front of you. And my response was, I like to wait and see if I can't, the following day, find pullbacks and find an orderly way to enter those trades. And I'd like to go over tonight one example. Yesterday we know the airlines were really on the move, and today there was an opportunity for a planned pullback trade in several of them, and the one that I'd like to point to is Southwest Airlines. This is ticker symbol LUV. This was on the core portion of my trading plan today, but there were some alternate ways to get into this one, and I'd like to show you one of my favorite tools for planning those pullback entries. So aside from support and resistance, I like to use a Fibonacci trend line, and if we go from trough to peak on the last big move that LUV made, we can see here that we've got a set of pullbacks at the 382, 50, and 618 levels. So we've got a 38.2% pullback, a 50% pullback, and a 61.8% pullback. Those are the lines that I like to use. And what these allow us to do is project into the following day's trading where the stock might bounce. So with this in mind, let's take a look at what happened on December 8th, 2016. As you can see here, Southwest opened on the upside, started moving lower immediately, and where did it land? $49.24. That is the 618 pullback from yesterday's big trend move. Now, would you necessarily grab it right at $49.24? Probably not. You probably grab this $49.36 rebound as it comes back up and through. So the 618 level, maybe you get this if you're lucky. The $49.36 50% pullback, that one's much easier to spot because you're coming back up off this low. Once you get it, you're in. And what you're really looking for is a retracement to the prior session high right there at $49.87. All these tools that I've been talking to you about all week have been proactive. They're predictive indicators. So Fibonacci is similar to the support and resistance lines and the pivot lines that we've been talking about, because what they do is anticipate what is going to happen when price gets to a certain point. A lot of other indicators are based on what price has done. They're just telling you what happened in the past, and all those oscillating indicators really do is give you an indication of what price has done in sort of a summary fashion. But here what you can see is how these Fibonacci lines can interact with trend lines and pivot lines and everything else to give you a real nice toolkit of predictive indication of what price may do and give you a hand in planning your strategy for what to do when price pulls back. So there you have it. I hope that helps. If you have any other questions, shoot me an email, adrian@traderinsight.com. I hope you had a great trading day today and an even better one on deck for tomorrow. The best trader education anywhere, only from TraderInsight.com.